Hello, David Smith again here, the TCB Group. Wanted to talk a little bit about term life insurance. So, this is probably one of the most common life insurance types that people are familiar with, typically because younger people get term life insurance because it's cheaper, their health is good, they're looking to use it to protect a large amount of exposure or risk because maybe they still have a mortgage on their house, whether it be a 30-year mortgage. They have kids at home that are young. So usually they're going to get a term policy that has a very high face value, typically no less than 100,000 all the way up to 500,000, a million, whatever the case may be. So something to know about term life insurance is it comes in different varieties of coverage. One being the term period. So there's 10-year terms, there's 15, there's 20, there's 25, and there's 30. And it depends on the carrier which terms are available. I have contracts with over 16 different carriers, so I have different options. Um, Another thing to know is that the shorter the term, the cheaper the policy is going to cost. So the reason for that is the insurance company has less risk involved because they're only covering you for 10 years rather than 15, 20, 25, or 30. 30 being the longest term that I've ever seen a carrier go on a term policy. So, that being said, if you were to get a $100,000 10-year term policy, it's going to cost less than a $100,000 30-year policy. Now, the thing to know about term policies is that they're only good for that term. Now, insurance companies will continue to cover you past the term. However, you are not going to want to pay the premiums that they change to. And if you have a term policy already, I encourage you to get out your policy and look at the schedule that shows your premium payments for each year. And you'll see that at the end of whatever term you chose, 10, 20, 30 years, you're going to see that the policy will continue on, but the schedule for that premium is going to go from this to this. It's going to be a lot higher. So that's why it's usually a good idea to start shopping around before your current term uh, policy runs out to either get another term with a different amount. Maybe your needs have changed, you don't need as much coverage anymore, or maybe start looking at something that is either a whole life or a product that will act like a whole life, whether it be a universal life or a indexed universal life policy. And I'll talk more about those in another episode. But just know that term policies are good for what they're meant to do, as long as you understand the benefits and the costs associated with it. Now, one other note that I will put is there are still a few carriers out there that offer what's called return of premium term policies. Now, the catch to that is that you have to get a 30-year term and you have to be either 50 years old or younger because they have to be able to cover you the full 30 years up until the age of 80. So if you're 50 years old and you're wanting to get another 30-year term, you might want to look into a return of premium that costs a little bit more per month, but the idea is that you're going to keep it for the full 30 years. And then at the end of that 30-year term, hopefully you're still alive and well. You can actually get all of your money back that you paid in, and you get that money back tax free. A lot of people will use this type of product for mortgage protection. So, say I buy a house and the house costs $200,000. I might take out a 30-year term policy to cover that $200,000 for that 30 years. And I put in $100, $200 a month on this premium, depending on how much it costs. And that might be a little bit of an exaggeration, but the point is that at the time that I've paid off my term of my loan, then my 30-year term policy will be up and I can get all of that $100 or $200 a month that I put in back in one lump sum tax free. So if you're interested in looking at something like that, if you're 50 years old or younger, I can also help you to get some pricing on that as well.